All right, let's roll with it. All right. Happy Thursday. How you guys doing? Beast Mode Brandon back again. Before we do get started, this is streamed live, recorded. We in. Today, let's get the good day. 1K days. That's the goal, right? Anyway, tonight's objective. We just like to do a trading tune-up so you guys can kind of see how I operate, how you guys can do the same exact thing that I do, and how I'm able to watch multiple stocks at one time, right? So each and every day, I mean, there's things where I don't know which way they're going to break, if they're going to go up, if they're going to go down, but I take my reaction and I'm ready, right, for that play to take an action. So tomorrow we do live trade, same Zoom you're on right now. Be there, be square, I like to say. You guys are more than welcome to hop in. 9:30 a.m. Eastern time. You guys could definitely link in right there if you'd like. And with that being said, you're going to hear me talk about a couple things on the call and how I navigate through the markets so that you guys can take full advantage of that as well. So if that's something that interests you, then you're going to get great value of that, right? Have any of you guys been on the live call? If you have, put a 1 in the box. If you haven't, I'll put a 2 in the box. Let me see something real quick. If you didn't know that yet, we do live trade every single day. We're in the WhatsApp chats as well. You guys, I know a whole bunch of you guys are in there. Yeah, I can see a couple twos in the box. Yep. So you're more than welcome to hop on in, and that's kind of the objective right here. So, all right, let me share my screen and let's rock and roll.
I feel all calm on my knees.
What'd you say? Hey, what up, Bill?
Oh,
Hey, what's up, Brandon? I'm sorry, man. Let me mute myself.
Yeah, you good. So coming into the morning, you're going to see this coloring book right here on the chart. It's definitely going to go over a lot of people's heads. It's not the objective right now. I simplified things for us all in trading view. So I'm going to bring over that chart right now. That's on another screen. Let me see which screen that one is going to pop up on. All right. Can you guys see my trading view chart right now? Awesome. All right. So why is my screen so small? First things first, one of my staples is the floor and ceiling, right? Very, very simple yet powerful technique. We take it one step further and we use the scoreboard and we use our AI tools to kind of give us probabilities and bias of things that we're trying to accomplish or do each and every morning, right? So first things first, one of the things you're going to hear me say is you come into the Discord. Nobody is left behind. You come in here to the stocks and options tab. We can chat in there. You can tag me. I am Brandon from Beast Mode. But down here in the alerts, you're going to see something like this. Let me see here. I see Jamar firing away on the alerts. Today we took the leaps in the report. Walmart. We all were happy. That was a great one, but that's not what I'm looking for. All right, like right here. Good morning, team. I'm watching Meta and JPM for ceiling breaks. I'm watching UPS and Visa for floor breaks, right? Also scalping ES and CL because at that time, there was tons of volume, right? Tons of volume for me to be able to get into the trades and get out of the trades, right? So it's not, you don't have to be in the live room if you don't want to, but that's one of the things. On top of that, we also, that's what I call those the safe plays. You like to be more aggressive. I got the notepad right here. Every day, if Bill says, Brandon, what were you guys watching on this day? I have it written down. That's how I can backtest. That's how I create and instill confidence within myself. Highly recommend you guys doing the same thing because every 2 weeks, which is 10 trading days typically, I expect to be green over that time. The only way I'm not going to be green is if I don't stay consistent and I don't use proper risk management, right? So I'm going to show you, walk you through this, and you'll see what exactly I'm talking about, and it'll be right here. So first chart you got right here. Let me get my coloring, or let me get my drawing tool real quick, and I'll walk you through it. So first things first, this bottom line right here, that everybody see that orange? Let me go change it to a lighter blue. All right, that's a little bit better. So first things first, you see this. Let me zoom this out a little bit. All right, so like right here, you see these tags right there, right? first things first, you're going to see you got the ceiling, right? And you got our floor. Real simple. When we say we're watching stocks that break the ceiling, if they break the floor, are we taking them? No, we're not taking them. If we're watching stocks that we want to break the floor and they break the ceiling, are we taking them? No, we're not taking them, right? What we're doing is the market opens up right here, and it's going to populate this box, right? And these boxes have highly probable areas of reversals. At these areas, I like to see what happens, and then I like to execute. For instance, if we break the ceiling, we're opening up right here, price rolls on up, and we violate this ceiling, which means price breaks above it, I'm taking a buy or I'm taking a call option, and I want to hold it in this vicinity right there. If I'm trading futures, the good thing about futures is I set up a bracket order where I have a take profit and a stop loss, but once it moves X number, like here's my entry, here's my take profit, down here's my stop loss. Once price moves like right here, it's going to delete the take profit, delete the trail stop, or delete the stop loss and throw me a trail stop. So as price goes up, my stop loss moves up with it, then it smacks and gets me out, and you'll hear me say, bummer, green bag, right? So in this instance, this is why I'm saying that. In futures, I have that. On the stock option side, I don't. All right. So when we break the ceiling right here, I wanted to get close to this purple line. If we get in that vicinity right there, I'm going risk-free. I'm either taking profits or I'm going in a trail stop. We would call that as a winning trade in a back test. Agreed? If we break the floor, price rolls on down, breaks the floor right there, I'm taking a put, and if it gets in this vicinity right here, near that purple line, I'm going risk-free or I'm taking profits, right? Today, we were watching CL in the room, and we broke the floor right there. It did not get close to that purple line, but my stop loss went from up here and got triggered into about right there, because as price moves down, it takes away my take profit, my stop loss, and then it'll start trailing me down, and this actually protected me. Same thing on the call side. Same exact thing. It pushed up, and it threw my trail stop in. Now on the stock option side, I don't do that because I'm watching it, but I'm going to show you it's kind of similar, but I do move my stop up with it, and I'm going to show you how I'm able to watch different things, right? I'm just walking you through some of the trades that we are taking each and every day. So today in the room, one of the trades we were looking at was it was Tesla. Wait for that to load up. We wanted Tesla to break the ceiling, right? So if Tesla broke the floor, are we taking the floor break? Absolutely not. We're not taking that. So look what happened right here. We broke the ceiling right there, and this would have been my stop loss, or you could have done a close right there. Candles are green, which is looking good. Price pushes up, comes back down, gets close to that purple line right here. Told everyone to go risk-free. This right here was about a $450 winner for me, risking about $1,200. That's a 33% ROI return. Now, I was willing to take about a 40 or 50% loss. So that's not bad. You know what I'm saying? So in the stock option space, what's nice about this is typically if price rolls over and stops me out right here, typically it might be about a 20 to 40% loss. But normally, depending on the day, I should say, on a Thursday and Friday, this right here is enough to give us 50 to 100% ROI. On a Monday, Tuesday, and Wednesday, you're probably getting about 10 to 30%, because you have to understand you're essentially buying time if you buy a weekly expiration, especially on Tesla, because the options expire on Fridays, right? That's why we call them weeklies. So if it breaks the ceiling, I'm taking it. One of the stocks we were looking at to break the floor today, we wanted Google with an L to break the floor, and it's all off the scoreboard, right? We go over this time and time again, all off the scoreboard. If Google would have broke the floor today, then I would like that. I would definitely like that, right? That was one of them. What was another one? We're watching CL, Microsoft. See what we got here. I don't know why that thing is like so suckered in. Once again, we come back down here. Candles are green. We did not break the floor. Hey, we're not getting that. So anyway, one of the techniques, one of the staples, floor and ceiling. When I post that in the Discord, that's to give you stocks to keep an eye on them, right? Coming over here, the next thing that we're doing is we are taking, you might hear us take our SPX lottos, where me and Mike call them out. we're actually using, you see where it says this AI Lotto high, AI Lotto low. That's the second technique that you're going to hear us call out. And sometimes we're getting calls loaded up, sometimes we're getting puts loaded up, right? And I guess let's just put SPX up because we always trade it. Sometimes, and I'll explain why. Sometimes, where are we at? All right, so sometimes, right? And let me put this on I'll put this on a 5-minute. All right, sometimes right here, you're going to, you see the AI Lotto high. When we call out these Lotto trades, we're not just calling out random strikes. So these are the call strikes that we're typically calling out. Now, sometimes if the market is slowing down, right, sometimes we may take the calls right here, right? Maybe. It just depends the open interest set of rules, right? But from the probability standpoint, these AI Lotto high and low targets and those option prices has a very, very high probability to give us 50 to 100% ROI move. And that's why it's telling us that that is a very high probability option to get set up. So what happens is we wait for our first 5-minute bar to take in place. And we're kind of waiting to see if we start pushing down, start pushing up. Right here's where we called our calls and our low of the day, about right here. If I put my line, we come down to the low of the day, and then we bounce. Huge support. I always cut them if it breaks the low of the day. If we take the AI Lotto high targets, if we take the lows, then I would use the high of the day as my stop out. I do not have a set ROI stop. It is not 20, 30, 40%. Sometimes it might be 50% or 60%. Today, those that held, you ended up getting a nice winner. You see what happens? Price went up. So today's actually a gnarly day, I like to call it. But you come into a different day, like yesterday, we had our low target down here, our high target up here. Look what happened. We started selling off. We called our puts right here, and look what happened. Came back down. A lot of us went risk-free right there. Believe it or not, at 33 down here to 22, that's over 100% ROI move, taking that AI Lotto short target. So once again, yesterday, right, when price went down and gave us that move, we would take the AI Lotto low, and that's the put option we're getting loaded up. Now, just give me like 5 more minutes because I'm going to make everything come in full circle so that you're able to take some of these trades. Is everybody following me right now? Give me a 1 in the box right now if you are following me right now. Give me a 1 in the box right now. You guys are following me right now. All right, I got a couple 1s in the box. Awesome, awesome. So that's why we take some of those, right? And it's not just SPX. We've been taking NDX, which is the NASDAQ, same thing. If you loaded up these contracts today, this move right here, that right there is about 800% move. 800% ROI today. So you don't just have to take SPX. The reason why we trade SPX in the chats is because everybody can afford $200 to $400 for a trade. You know what I'm saying? So highly recommend. Don't focus on the money in the beginning. Focus on understanding, trusting, letting the system play out, and going about your business, right? So that's system number 2. Then system number 3 that you're going to hear us call in the live room, we're going to go back to SPX because we can still get these contracts loaded up, and we're going to go on a smaller time frame, a 2-minute or a 1-minute chart, right? And you're going to see something just like this. So what we're waiting for, once again, we take high probability setups, right? We only take high probability setups. Like I said, market opens up. You got that AI Lotto high target. You might have got your call right here. Unfortunately, this doesn't look like a big move, but think about it. If you entered here at 55.13 and in 6 minutes it's at 55.20, that right there is 6 ES points. If you use that AI Lotto high target, that's a 50% ROI gain. Are you happy with that or are you not? All right. Do you hold a trade to stay in it for a time, or do you hold a trade to stay in it from an ROI standpoint? You guys, we all should hold it for an ROI. We can't control that. But anyway, the third system, what we're looking for our volume bands to be expanded. And this is the new Swing Master Pro AI. It's all but ready for release, and everybody in the mastermind, I got something a little bit special for you guys, but just hang with me just a little bit longer. Final touches are getting made on it right now. The third trade right here, or the third system, what we do, we wait for price to come down. See this reversal arrow right there? When this candle closes, this would be our entry, right? I call this the boogie system because I name everything. I like to have fun. You hear me say Moonshot Scott. You hear me say Swing King. This is the boogie system, right? You guys call me the Swing King, but this is our boogie system. If this is our entry right here, right, this right here would be our stop loss. So we know where we're risking. If we're trading futures, we're putting our stop loss right there no matter what. If price hits it and goes down, you're cutting that trade for a loss. Guess what happens? Price expands right on here to the upside. You got a winning trade. Now, you see how we got this nice pullback? This right here really isn't a pullback. This up here is a little more of a pullback. So I would enter on either of those reversal arrows and put my stop loss there. Price expands to the upside. Now keep in mind, this doesn't look like much, but if you entered here at 29 and went up to 34, this is $250 on one ES contract. Throw me a DCG in the box if you'd be happy with $250 in one trade. Think about it. You just paid half your subscription in one trade in one day. Every single one of you guys should be putting DCGs in the box. Hey, there they are. They flying in. So in the room, we call these out live. First hour, hour and a half, we're calling them out for Amazon, Qs. You could trade NQ. You could trade SPY, ES. Same thing right here. Price comes down. Here's our reversal arrow. Here's our stop out. Price expands to the upside. Then price comes back down. I'm waiting for price to come back up. And I'm taking my entry right here. Because once we come back in here, I want us to break out. I'm taking my call right here. Here will be my stop loss. Guess what happens? Price expands to the upside. You could scalp SPX with confidence, with ES with confidence. Matter of fact, someone give me another random symbol just so you know I'm not setting y'all's up. And you know I wouldn't do that, but Bill, give me a symbol, bro. Money Bill.
Give me NVIDIA. NVDA.
NVDA. Check NVIDIA out today. How we would have traded it today, right? This is NVIDIA. So the market opens up, right? We come down, we touch our volume bands, we get our first arrow right there will be our buy, there will be our stop out. That's your line in the sand right there. Did price expand to the upside? See that? Right? Absolutely it did. Now this right here isn't really, it didn't touch it and go in it like that, but this did right here. Price comes back down. Here's your buy. Here's your stop out. If your stop out is that little, right, you can go risk-free right up here if you want to. There's no need to hold it for more because if your stop loss is only going to be 50 cents on the share side, that's an easy 15, 20%. You could take this one because we got a nice pullback, and you could take it right there on that for sure. But after you got that first one on this push up, this right there probably 40, 50% ROI, maybe 75% ROI. You could be one and done. Our goal is to be green, not sit here and trade all day long. But here's another setup. You come back down in, here's your buy, there's your stop loss, price expands up. Here we come in our volume bands, price comes up, here's our entry, here will be our stop out, price expands to the upside. Here's another entry, price comes up, there's our buy, there's our stop loss. All right, we got nicked out for a loss. We do lose. But we're also trading at that time in the afternoon. I'm not doing that. You know what I'm saying? You might, but I'm not. You look at NQ. You have a lot of NQ traders. It is the same exact thing. The same exact logic, principle, same exact thing. You come all the way over here. Let me zoom back out. Where's the beginning session at? Right there's 8:30. All right, here we go. We got this right here. Check out what happens. You got a nice pullback. You got your buy here. There's your stop out. Price pushes up. Pullback. Touches our volume band. Entry. There it is. Pullback. Here's another entry. Pushes up. Pullback. Here's another entry. Stop loss. Price pushes up. Now think of this. Doesn't look like much. And these are 2-minute candles, right? And you can do this on any time frame. But just understand the 2-minute gives you a very, very tight stop. Right? And what I'm going to show you next is going to bring all this full circle. And any question you guys have, feel free to fire away. So right here, the entry of that is 493, and that is 531. That right there is about 40 NQ points. That little move right there, that's money. You get what I'm saying? I see your eyes lighting up. That is money right there. So that's when we talk about our floor and ceiling. We talk about our lotto targets, and we also talked about our boogie system. We call all these trades out live. Me and Mike, I'm in the live room. Me and Mike's in the WhatsApp chats, and we are golden. So now the next step to my equation, right? We're gonna put what we just got taught and put it to the test. So let's say all right, let's say today, right? Because we were watching Tesla. All right, we were watching Tesla today. So we're gonna put Tesla up. Let me see if I get another chart here. Right here, my chart. All right, so this is what we're gonna do. We're going to make this brown and make this. We can't do brown. We can do we could do and this is how you got to do it, right? This is what you call an active trader. So I always like to do 1, 2, 3, 4. Why? Because 1 is my calls. Now I can't see this. 1s are my calls, and these are my puts. Why? Because puts are going down, calls is the upward chart, right? 3 would be my calls, and then 4 would be my puts. This little 4-grid setup is going to allow me to watch 2 different stocks, and I can enter this trade in 1 click of my button. So some people say, man, Brandon, I just can't get in as fast as you. I'm going to show you. This is the keys right here. This is the keys right here. So if you don't know how to do this right here, you come right on over here to these dashed lines, click it, press detach. If I press detach, this same grid is going to populate right here, and I can put on another screen. Look, it is the same exact layout. I'm going to delete that because I already have a four grider. So I'm going to come back here. Here's my 4 grid. So I see I don't want it to mess up my room charts. 6, 7, 8, 8. All right, so I'm at 6, 7, 8. All right, so we're going to do this. We're going to put this one at 1. We're going to put this one at 2, this at 3, and that at 4. So now I know, right, that they're all there. Another thing you have to do is when you do this, you have to click chart and you have to click AT, which is active trader. So over here, I need to click active trader, and down here, I need to click active trader. Does everybody see that? And you can make this a little bit smaller, a little bit smaller. Now remember, this is on another chart, right? Or if you're waiting to hear one of us say that we're taking the trades, then you can do that. So how we do this, right? In the mornings, I'm telling you guys, right? Remember that alert I told you if I'm getting ready for ceiling? This is at 9:32 a.m. That means we got about 15 more minutes until we're even going to get a floor or ceiling break. Give me a 1 in the box if you feel that you can get this loaded up in 10 minutes or less. Give me a 1 in the box. Realistically, what I'm about to show you, you should be able to get this loaded up in 1 minute or less. So when we trade SPX, right, each day in the room, you should be able to get these loaded up in a minute or 2 minutes. We tell you the strikes that we're getting loaded up 3 to 5 minutes before we're even thinking about taking the trade. All right, I see you guys put 1s in the box. So today, or today, let's just say we're looking at Tesla, right? And at the time in the morning, let's see where Tesla was at. Tesla. Tesla's over here. Even though we know it moved. All right, so Tesla's right here. Today, we said we're getting loaded up the 210 calls, and we said we're getting loaded up the 205 puts. All right, so now, and let's just say it happened at 32 after. So you come here to your trade tab, how you take the stock option trade. You come over here and you type in Tesla, right? Because we are day trading, we are clicking 1 day till expiration. I put this strike price. You can do this 4, or you can do this 100. I do 100 because I like to see a wider range of things. When I used to trade Amazon, I used to go like 50 or 60 strikes out of the money. You probably don't need 100 anymore. You just got to scroll down a little bit. So remember, we said we're getting loaded up the 210 calls and the 205 puts. All right. So now what we do here, we take the 210 calls and you click on the bid or the ask. You take your mouse and you right click it, not left click it. You right click it till this drop down menu is populated. Does everybody see that? Everybody see that? Right? We come again. Mornings open up. It's 8:30, or I'm sorry, it's 9:30, 9:31. All right, guys. I'm right down the sheet. Tesla ceiling break today. We're going to keep an eye on it, and I tell you which ones to get loaded up. So 210 calls. We right click this once again, and we're going to press copy, or you can press send it to, remember what our chart layout was? This one was a 1. So I'm going to send my call to the 1 and my put to the 2, right? This is the fastest way to do it. Come right here to 210 calls, right click. We're going to send that option contract to chart number 1. See that? Guess what? It's now sent to chart number 1, right? That's the 210 calls, and we said the 205 puts. Now you come over here to the 205 puts. You right click it, right? You right click it and press send chart to number 2. Remember, our puts was linked to chart number 2, and you have to determine what chart number you're linking it at. So now I'm going to press yellow, right? So now I'm going to come back to my chart, and guess what just happened? This is actually the option chart. What happened today? That's exactly right. We scroll in. This is today right here. We're on a 5-minute time frame. We on a 5-minute time frame right here. Check it out. So today, before anything happened, this is a 5-minute time frame. If I put my candle right here and you see it say 2.64, you know what that price represents? That represents the stock option price. If you didn't know that, you do now. This is called a spark chart, right? So now, before anything ever happens, this is what I see right here. I see this right here. First candle there, first candle there. So now I'm waiting. I'm waiting. So then, let's say let's pull up let's go back. Let's pull up what? SPX. I don't know the exact contracts that we were loading up today, but let's just determine what we were doing. Today up here, I think we took what, the 55, I'm going to say 55.60s. And then we took the 54.60s or 54.45s or 55s. So same exact thing. You come over here to your oops, wrong one. You come over to your chart. Now you type in SPX, right? Now you wait for this to load up. And this is today's expiration. So we were loaded up the 55, what was it? 55.60s. You right click this, and now we're going to send this to chart number 3, right? Send to chart number 3 right there. And then we were looking at the 54.60s or 55s. Right click it. We're going to send this to chart number 4. All right. Now I'm going to show you. I'm just doing it slow for you right now. Come back to our DOM. Now guess what this shows right here? This shows us what the contracts are actually doing, right? And see the time frame this is on? It's on a 1-minute time frame. 1 minute, or we're going to change it from 1 minute to 5 minutes just to see. So check it out. Here you got your contracts. Let me see here. Let me zoom in a little bit. You got your contracts right there. All right. So now let's check it out. So now we come back to our chart, right? And we sit here and wait patiently, and say we're going to get a boogie call or whatever we're trading, whether we're trading the lottos, the boogies, or whatever we're doing. If we look at this candle right here at 10:12 is a 2-minute candle chart, and when this closes, it'll be 10:14. So 10:14, I know that's when we're taking the trade, and our stop loss is going to be at the 10:10 candle. So 10:14 is when we're taking the trade. So SPX, 10:14. We'll go to 1 minute real quick. I don't know why that thing is so little. I don't know why that's so little. All right, 10:14. Or 10:12. Be right here, 39 cents. and the 10-10 candle lows are stop out. 32 cents and they're 40 cents. Next minute candle, they go to 51 and they ended up hitting a high. These are all 1 minute candles. Here's 90 cents or 80 cents. Where did it hit a high of? Hit a high of $1.30. So we got in that trade, right? Remember, we got in that trade, right? At 10-10, or I'm sorry, 10-12. And our contracts were 42 cents. And it never came down and hit our contract, our stop out, at 30 or 29 cents. So we got in at, once again, right here, at 40 cents. Our stop out was way down here, a little bit below, about 31 cents. Never came down to 31 cents to stop us out, right? And it hit a high of $1.30. Now let me ask you this. 40, 80, 120, this move right here went over 300% ROI. This move right here. From right here to right there, that is over 300% ROI. Give me a 4 in the box if everybody sees that. All right. Now you still might be a little bit confused, but just hold on a second. I'm gonna bring it full circle and I'm gonna close it in on you, right? So check it out. It doesn't matter what you're trading, right? So we're gonna walk through it again, and this time we're gonna do a ceiling break on Tesla to do another system break. So this one broke the ceiling at 946 or 947. It broke the ceiling. All right. So now, remember we loaded up our Tesla chart. So 946. So this opened up. It's about right here, right? Oops. It's about right here. So I'm going to put a line on it. This is 940. It closed at 945. Matter of fact, we just want to go to a 1 minute time frame. And we don't know what's going to happen. So at 946, which is right here where we took this trade, 946, I'm going to put a line. That $3.60 is where we get filled. All right. Now we come back to our plan. We're looking at our chart and trading view. When did we get close to this purple line? We got close to this purple line right here at 1020. At 1020, right? Now, these candles right here, you can put your stop loss there, or you can put your stop loss down here, right? So that is the 935 candle low. So if we come back here, like if you like to trade with stop outs, that's totally fine. So 935 candle low, which would be right here. So we entered at 360, right? We have a stop out right here at 220. So what you can do, right? This is why I like it. If we enter on this DOM right here, we get filled. We can go down here and scroll down, and we can put a stop loss in place, right? And we can put a take profit in place. All right. So now I don't know what's going to happen, but if I fatten this up a little bit, let's say I have a take profit of on my chart. We're going to offset these lines, right? Because this will be our entry. This will be our stop loss. We're going to do a take profit right here. So if our stop loss is 223, there's a potential I'm going to lose $140. So we'll say $100 up. I might be all right. So 453. 453 or 455. There it is. Where I might go risk-free. All right, let's check out what happens. 1 minute goes by, 2 minute goes by, 3 minute go by. Look what happens. Right here. 1, 2, 3, 4, 5, 6 in 7 minutes. I'm risk-free. I just made $100 and some. So on this thing right here, you see all over here, this is what you call your options DOM. I can turn this off and just press single. I can put in 1. If I put in 1 and press buy market or sell market, it's going to buy me a call or a put just like that 1 second. So I say that to say this. If I'm over here looking at my charts, all right, guys, I'm getting loaded up to 210 calls on Tesla and the 205 puts. All right, guys, we're breaking the ceiling. I'm taking the trade. On another screen, I am saying, all right, I'm taking this buy, I'm pressing buy, and this populates, comes up, and then I press send. Does everybody see that? Then I press send, and I'm in the trade, and it's going to show this right here is going to be all yellow, And that's going to let me know when I'm in that trade. How easy is that? Are you following me? Is everybody following me? Give me a 1 in the box right now. You still with me? So, I say that to say this. If we can prepare, and if this is way over your head, or you never did this before, please execute this in a simulated account first, because practice makes perfect, right? So when I'm over here looking at 8 different charts, I got 8 different symbols or 4 different symbols that I personally watch every day. SPY, Qs, Amazon, and Tesla. On my other screen, I have a call and a put on SPY, a call and a put on the Qs, a call and a put on Amazon, and a call and a put on Tesla every single day. And whatever gives me the appropriate setup first, I'm taking the trade. So what I like about this is when you take the trade, it's going to show you an order right there. And then now what you can do is you can press this single and press trigger with brackets. So now you can put $1 up and $1 down. So if you get filled right here, it's actually going to put a stop loss right there for you and a take profit right there. And it'll be a tab right there on the chart itself, right? I have a video that I've already done in a live market explaining this a little bit more in depth. So what you can do is you press it once and you can drag it down here and put it there if you want. You can take your take profit, press it once, drag it up. So as price moves up right there, I just take my stop loss, put it up right here. Now I just sit back and Gretchen might ask me a question, or Bill might ask me a question, or it gives me the availability to look at something else because I'm already guaranteed a winning trade. And that's all I'm doing right there. Every single day, I'm prepping these contracts uploaded, so I'm 1 click away from taking these charts. Is that crazy or is that crazy? And that's how we live trade.
That's crazy.
Hey, steak and bacon, baby. Let's go, right? 1K a day. Come on. All right.
1 kid,
You got a question, Bill?
I do, but I want you to continue what you're doing, but I want you to explain covered calls.
Gotcha. All right, give me a second. All right, so that right there basically sums up the day trading with me getting prepped and ready. So when I come into tomorrow and I'm looking at my charts, right, I don't care what moves because I'm prepped on another screen. So I'm looking right here, right? And today I see this right here. And we called all these trades out right here. Remember that boogie system we had? We called calls out right here. This is our stop out. We got a winning trade. We called calls out right here. Here's our stop out. We got a winning trade. 2 trades today on ES was about $600 for me. SPX lost one, won one, barely, was a little bit red. Amazon, you see over here, we broke the ceiling. Right here, that right there was about $400 for me on that ceiling break, risking about $1,200 or $1,300. The Qs, we called out a Qs trade as well. And I'm a scalper. I just want to be in and out as quickly as possible. So we actually called this trade out right here. We called we got a pullback. We came up. We actually called this buy right there with that tight stop. And I had my take profit, my stop loss as we went up, moved my stop out up. I got nicked out right there. I don't care because that right there is an easy $200 for me. You know what I'm saying? Using the same exact thing. Then I called this one out right here. We got that huge reset. We called the call out right here. Here was our stop out. Price pushed up. I moved my stop up. And guess what happens? On we go. Except, only problem is I entered here. Here's my stop loss. Once we hit that 1-to-1, meaning I'm risking 1 to make 1, I move my stop up right there. We have a saying in the room, it freaking stops me out, but you should keep holding because moonshot Scott happens. And but it's all good. We all went in together, and that's all that matters. So that is how I'm getting prepped each and every day. I got my chart layouts ready to roll. And this is basically what I have on a different screen. I got 4 monitors, 1 screen. I got an 8 grid, and all you could do is you come right here and you can change it to 8. Now you got 8 and you're ready to go. That's too tight for me. You go to 6. 6 is a little bit better. If you are newer, you could simply do just 2. And if you are a little bit more ready to up it a little bit, you can prep 4. Next level, you do 6. I got some people that have this loaded up right here, which is absolutely absurd. Way too much for me. You know what I mean? I think 8 is plenty to watch a day, but more importantly, 4 is manageable for all of us to take. It does take a little bit of getting used to, but it takes a couple minutes. You know what I'm saying? Couple minutes. That's it. Anyway, that is how you can live trade. So tomorrow, that's the trades I'll be calling out. Feel free to come into the chats, and it's on the same Zoom that we on right now. So other than that, hey, let's open it up real quick. We got 15 minutes left for questions. Does anybody have any questions pertaining this first? Anybody have any questions pertaining this first? All right. If not, then hey, you guys could ask any question you want. You want to know what I want to add for dinner tonight? Ask away. Bill, you up, baby? What's up?
So let's say I have at least 100 shares of a stock and I want to do a covered call. So let's look at, for example, let's just look at Apple, for example. I got 100 shares of Apple, but I want to do a covered call on it.
All right, I'm gonna be honest with you. Sell one covered call on Apple. You need you're gonna need $22,400.
Right, I understand that.
All right. So this is how you do that. You come right over here. You go to your trade tab. And you go to Apple. And what date you want to sell your covered call for? Do you know how a
I
covered
don't
call
know.
works?
Yeah, I do. I mean, the way I understand the covered call is I have 100 shares of that stock. If it's at, let's say 200, I agree to sell it if it hits 210 and I get paid a premium on it.
All right, so this is what happens right here. So right here, right now, let's say we buy 100 shares at and 100 shares times 224 is $22,472. That enables you the right to sell one covered call. So what you can do here, and this is a great technique for sure. I tell all my clients or the people that work with us that have 100K or more, you could definitely make $4 to $6 grand a month pretty consistently, if not a little bit more. And I'll show you right now. So let's say you buy 100 shares right here at 224, and you go out a month of time, 29 days, and whatever contract you want to sell it for, like it's at 224, you're probably going to sell it at 230, right? So what you're going to do is you're going to come to the bid column and press this, and then you're going to sell one contract right here. And you're going to press limit, and you're going to press confirm and send. This is telling you that your max profit is $330 on this, right? So you're getting $329 credit. So what happens is you have $2,472 into this. You sell one contract off of the 100 shares you're leveraging, and if we close in the money, which is $230, let's say $230.05, right? They're going to sign your shares, and they're going to take your shares because you have the right to sell their shares at $230. $230. But for that $230, you're going to collect $342. Now, if you come down here to your calculator standpoint, let's see if that makes sense to do that, right? So you take $345 and divide it by 24,472. You're getting 1% for holding it for the whole month, potentially, right? But you're also making the difference of 224. So you're making $600. So really, you're making a little bit more than that, right? So you're making because you're selling them for 230. You bought them at 224. You're making basically what, $5? We'll just say $5 a share for simplicity. $5 times 100 is $500 plus your $345. 800 divided by 22,472. You are now you're making 3% this month, which ain't bad. It's a safe way to do it, right? Now,
All right.
now if you do something like this and you go to next week, guess what? You could sell the 227s and you're making almost the same percent. Instead of making 3%, you're making 2%, but now you're doing it in 8 days instead of 29 days. You follow me?
Mm-hmm.
Now, if you want to get started with this in a real simple standpoint, what I recommend doing is I recommend doing like the wheel technique where you're going to sell cash secured puts first, and then once they assign you, then you wheel and deal the call side. So what I mean by that is instead of buying 100 shares first and foremost, and you want to buy the shares, why not do, say in this example, we're doing 8 days expiration and it's at 224. Let's say we want to sell, we can't do the 225s. I mean, you could, but let's say we want to do the 222.50s. So if you click on the bid and you want to sell this for one share, right? You're going to sell one contract. You're leveraging your $22,000. So what happens is just hear me out. If you sell this contract and get $174 up front, you're leveraging, and you got to, and they hold this, right? So they hold this. They're going to hold $22,250, right? So you'll get $175 up front. What they actually do is instead of buying in $22,250, they'll just subtract this credit. So it'll be about 22,200 or 100, give or take, right? And when this expires in 8 days, as long as your shares are above $222.50, say it's at $222.51, you just collected $174 for free, and you don't do anything. Now the downfall with this is this. Let's say when they expire in 8 days, the market tanks and they are down here at $210, right? Now you sold you sold this contract, so you actually own the shares at $22,250, even though they're worth right now $21,000. So technically, you're down about $1,000 right now, technically. So then what you would do is you would just wheel and deal, and then you would sell puts, or I'm sorry, now you would sell the calls because you own the 100 shares, and that's why it's called the wheel. It's like a continuous wheel. So then you would sell something like 225s, might make 1% or 2%. You're going to make all your money back on the share side, and now you just collected about 1% on the put side, maybe 2% on the call side, and now you're up 3% just for wheeling and dealing the shares. And it's very great for stocks like Apple, stocks that always come back. You feel me?
Coca-Cola.
Yep. I like doing it on Ford because it's cheap. You buy 100 shares for $1,000, and you can make like 2 or 3% every 2 weeks. So you make actually more on Ford than you would Apple. But I mean, it's not as risky. You know what I mean?
Yeah.
You could buy 100 shares. You could buy 100 shares for $10,000, and you could collect a premium of $160. So you just made what? 16% in 2 weeks. You know what I mean?
All right. So when you do that, what do you are you clicking the opposite? Meaning, like if we were playing calls, we click the bid. So when you're doing this, do you click the ask?
Yeah, you're clicking the bid, bro, because you're selling the contract.
Okay.
Yep. Yes, sir. I would show you, but I don't have any.
It's all good. It's all good. We'll jump on another call separately when I got like 400 shares or something. And I'm like, Brandon, you got to get on this call with me so we can buy it.
Gotcha. I'll sell Ford tomorrow and show you an example, and I'll tell you like execute it and stuff like that. So then I just record it.
Yeah.
We'd be good. So it's very simple. I mean, in a real simple standpoint, 100 shares at Ford. Like say right now, just starting, I would sell the puts, right? So it's at 1046. Maybe I'd sell the 1050s if I'm bullish on it. I'm selling the 1050 calls, or I'm sorry, the 1050 puts. So I'm getting $19 while leveraging $1,050, right? So ROI on that, let's see, it's about what? 19 divided by 1,050, just from a visual standpoint, it's 1%. And you're getting that's in 1 week. It's almost 2% in 1 week. If you do this every single week, there's a chance you can get 8% at the end of the month. Super safe, because think about it. You're never really, I can't say you're not really losing, but the thing is like you're going to own shares of it. So it's like worst case scenario, this thing's going to close at $10 and you're down $50, right? But you're really down $30. So then you come over here and then you sell the call side. Now you're going to make back your $30 on the share side if you get called out. Plus you now collected 2% here and 2% there. So now in 2 weeks or 3 weeks, you're sitting at 4% up. So it's like a slow, safe way to do it. But I tell people this right here. Think about this. If you had 100K, right? You had 100K and you bought into something like waste management. Same thing as Apple, all right? And you just did a monthly contract. And these will tighten up right here. And we're at 206 right now. So if you sold this, right, 100 contracts is 20,000. So if you had 100 shares is 20,000. If you had 100K, you could buy 500 shares of this or leverage 500 shares to collect $270 times 5, which is, we'll just say $1,250 for simple math. That right there in 1 month, it's a free $1,000. And if you get stuck holding these for 3 months, you can just keep selling the calls and getting that 1, 2, 3%, plus it pays a dividend. But this is the problem. When you do safe companies like this, they purposely deal it like this because they pay dividends and they know that they're safe. So when you do other companies like crappy ones like Neo, right? I mean, I don't like Neo, but when you do like a more riskier one, that's really where you're going to make the majority of your money. Because now check it out. If you sold a put on this at $350, you're getting $16 and you're only leveraging $383. So now look, check out these ROIs. 16 divided by 383. Now look, you're making 4 or 5% in 1 month. Get what I'm saying?
Yeah.
So, I mean, but this is a crappy company in my eyes, you know? But that's just my opinion.
I mean, I was just looking at it from the standpoint, if you got like a little landfall of cash for like 40 grand, instead of paying bills off or, you know what I mean, take that 40 grand and go buy you a company or two and do this and just pop it every month for that 3%, 4%, 5%, whatever you can get. And you still got the 40 grand and the stock. If the stock sells
that's
out.
what I'm saying. That's what I'm saying. So now think about this. If you get 4% a month and at the end of the year, you're now at 48%. So that 40 grand is now 60 grand. Worst case scenario, we're going to have a pandemic and your shares are going to lose 20 or 30% of their value, but you just keep selling covered calls until you get it back. So like on a chart standpoint, I'll show you an example. So like, let's say, all right, let's say we were doing Amazon. And Amazon's actually a good one to do because they don't pay a dividend. So we're on the daily time frame, right? What I like to do is I like to do this. Now just hear me out. We're going to start doing this on June. So this gives us June, July, August, and we're in August right now. So June, July, August, about 3 months. When we get bullish on the alligator, I want to sell puts. The goal is to sell the puts and not own the shares because you get that free 2% in a week. You get what I'm saying?
Mm-hmm.
So now hear me out. You get 1.5%, 2%. You sell the puts right here. 1, 2, 3, 4, 5. Guess what? You get called out. You get to keep the premium. Then you sell the puts right here. 1, 2, 3, 4, 5. Guess what? You get another premium. Now you sell the puts right here. 1, 2, 3, 4, 5. Guess what? Now you sell the puts right there. There's another winner. 1, 2, 3, 4, 5. Guess what? Now you sell the puts. 1, 2, 3, 4, 5. Guess what? There's another winner. Now you sell the puts right here. 1, 2, 3, 4. Oh, we just got called out. Now we sold the puts at 190, but we got called out. We own the shares at 183, so we're down $7 a share. Now we're underneath the alligator. Now you sell these calls right there. 1, 2, 3, 4, 5. Guess what? There's a winner. 1, 2, 3, 4, 5. Guess what? There's a big winner. Now 1, 2, 3, 4, 5. There's another winner. 1, 2, 3, 4. Oh my goodness. We just got called out of our shares. Well, guess what you do now? Now, as soon as we get back above the alligator, you sell the puts and say you can sell the puts right there. Probability says 1, 2, 3, 4, 5. You want to get a winner. So guess what? 1, 2, 3, 4, 5, 6, 7, 8, 9. You got 9 weeks that you're making what, 2%, right? 9 times 2. You're up 18% in 3 months on the share side, and you really didn't lose anything on the shares. Get what I'm saying?
Absolutely.
Because if you get called out on the stock side right here, right, and price comes back down and comes up and back down, here's your average. You really are not getting called out of the shares. So like maybe if you got called out right there and this was your average, that right there is about $10 a share. You lost 5% on the share side, 6% on the share side, but you gained 18%. So if you take 18 minus, we'll just say 8, you're still net profiting 10%. So if you had 40 grand on this, you just made $4,000 in less than 3 months.
Yeah.
And you know Amazon's not, I mean, I can't say not going to zero, but probability of it is really not going to zero. So in that example, if you look at Amazon, you start off with the cat, and this is called the wheel technique. Everybody knows that. If you do bi-weeklies, and you do Amazon, and it's at 177, and you go out, say $2 or $3, you're selling it, you're getting $161 up premium.
Per,
you know what I'm saying?
Per contract.
Per contract.
So if you got 4, then it's 4 times 161.
Yep. But the thing is to do this for Amazon right now, it's 17,000. So you could sell 2 contracts. You can get $350. So now look at it like this. Come back to the chart every 2 weeks. So from here to there, there's what? Almost $400. From here to there, there's almost $400. From there to there, there's almost $400. From here to there, they're pretty close, almost $400. From there to there, you might get called out. Let's say you get called out right here. All right, you didn't get $400. You bought the shares at a discount, because if you're selling the puts there and the shares are up here, you're getting the shares for cheaper. But now you own the shares right here. Now you flip over, and since you own the shares, you're selling the calls. So 1, 2, 3, 4, 5, 6, 7, 8, 9. You might sell these calls right there, and guess what? You might get called out, and you might get the $400 premium, but you're going to get called out of your shares too. So you didn't lose anything on the share side, but you made $4, 8, 12, 16, $2,000. So you made $2,000 in less than 3 months, and you were leveraging, give or take, about $34,000. So 4, 8, 12, 16.
9%.
What is it? Yeah, there you go.
9%.
There you go, 9%, just like we said. So that's 9% in 3 months. Imagine doing this for a whole year. 9, 18, 36% at the end of the year. You just outperform the SPY at the 6.5%. You know what I mean?
And you still got your money.
And you still got your money. But at any given time, you don't have to hold to expiration. You could buy back the shares or close your position for a small loss if you don't want to get stuck in the wheel.
Okay.
I don't like that, because now when you go back to something like this, right? We're on a weekly time frame. Guess what? All right here, and this is why I don't ever go all in. So like, let's say, like, hear me out. This is a smarter way to do it, but it's just me. Let's say we buy covered calls right here, which I wouldn't do, and you own the shares right here. Then now you're selling puts, and it's weeklies, nailing that 1%. 1, 2, 3, 4. 1, 2, 3, 4. You got 8% right there. And because these are weekly candles, you got 8% right there in 2 months, right? Now, right here, you don't want to keep selling puts, because if we're bearish on the alligator, what do you think is going to happen on the share price? We're going to keep falling down, right? So now what you do is you take the shares you own and you take another set of shares, right? And on the shares you own, you could sell calls right here to get the free premium on the first 100, on the first 17,000, on the second 17,000. Now you sell another set of calls, while you wait for your initial thing to come back to break even. Now you got 100 shares right here that you're riding for free while you just got called out of the second thing. So then you take that 17,000, the second one. Now you sell puts, and you just collected 1, 2, 3, 4. All these weeks you just collected free money, bro. And that's about 6 months of collecting free money. That's actually a year of collecting free money, bro. 1% a week. That's 52% in 1 year on $17,000. While the other $17,000 you had, you were waiting for the shares to bounce back to sell for a larger profit. So now if you did that at 120 and they're at 200, now you just made 70 or 80, almost 100%. So now your 17 grand is 34 grand. But then on the second 17 grand, you made what? 8,000. So now you're sitting up on the year 25, 30K. Get what I'm saying?
Absolutely.
Now you got me in a rabbit hole, bro. You got me all pumped up. You know what I'm saying?
No, I mean, but hey, dude, that's what we need to see, man. I mean, that's, you know what I mean? Because if you get money, like a drop of money, you need to be able to flip it and not just, you know what I mean? Just waste it away.
Hey, you ain't lying, bro. And I love to cover calls and cash secured puts. I told my wife, I said, man, think about having $1 million and just selling cash secured puts, doing different ones on different weeks, bro. Think about it. You're making 8 or 10% a month. I'm sorry, but if you can't live off 100K in a month, you need to sell the submarine and the helicopter. You know what I'm saying?
Hey, that's what I'm talking about, man. I love it. Thank you, Brandon.
So I'm 35 right now. My goal is to get my retirement account up to $1 million or more when I'm 40. And I'm going to retire when I'm 40. I mean, I'm still going to do this, but I'm going to technically retire when I'm 40 and use all that money to buy real estate. Because think about it. $1 million, you can legit leverage, like on 100K, you can legit leverage like $5,000 to $8,000 a month on 100K. Imagine what you could do on $1 million. You could probably get like 60 to 80,000 safely. You know what I'm saying?
Oh, hell yeah.
You do that for 2 or 3 months for the year, man, cruise on beast mode, baby. Let's go.
Let me go in those sweatshirts, baby.
Yeah. All right, hey, we talking now. Anybody else have any other questions? All right, well, hey, if you guys learned something new or you guys got value of tonight's call, give me a DCG in the box, please. Whoa, learn something new tonight? Smart stuff, B? Hey, absolutely. Dope call. All right, hey, I appreciate the love. You guys are all the rock stars. It's 10:10 East Coast time. We do live
Brandon.
trading. Go ahead.
Hey, Carl, will this be on Loom or will you post the recording in Facebook?
This recording is already on YouTube right now.
Oh, okay. Thank you.
So it's already done. Second I end it, you can go back and rewatch it. Beast Mode Trading.
Thank you.
Discord. I mean, YouTube. But I'll post the recording in the Facebook group, and I'll post it in the Discord as well, in the stock options alerts. Yep. So I got you. Second we end it, we'd be good. All right, guys, I'm going to bed. I'll see you guys tomorrow, bright and early live trading. Be there, be squared. Let's make some money. 1K a day. Let's get it. Hey, you guys ever have any questions, comments, or concerns? Never hesitate to reach out.